Welcome back, and joining us now on the show is Philip Newman. He's MD Metal Focus. Philip, hi, thank you so much for joining us. All-time highs yet again, another day for gold here. 2660 is done, and it's not just the dollar terms that we are making all-time highs. It's in Indian rupees and Japanese yen and Chinese yuan and euro and various other currencies as well. How do you see this one-way surge continuing for gold?
Well, first of all, thanks for having me on the show. It's good to be here again. I think the point you make is really on the money in the sense that because we are having these highs in the range of currencies, not just the dollar gold, that gives you a sense that this is not simply a currency play. We are having investors coming into the market in a meaningful way and obviously driving gold higher. Of course, you know, we have the 50 basis point cut behind us. Expectations are, of course, that the Fed will continue to reduce rates, perhaps not at that pace, of course, this year, but that will carry on into 2025. And unfortunately, the other factor that is obviously out there from a geopolitical standpoint, what's going on in terms of Israel and Lebanon, and unfortunately, how that may escalate. So I think those are, two of the factors that are really out there and encouraging investors to come into the market and potentially push it higher as well.
Philip, as the line goes, what goes up comes down. So should people be taking profit, or you think the way the situation is, even if a correction does come, isn't going to be so steep?
Well, I think there's always that risk that you will have profit taking, especially when you are reaching these unprecedented highs and fairly quickly as well. The way we've sort of gone through the 2600 and crashed through that and apparently holding those levels, I think it's quite likely that you will see some profit taking from investors. So you could very much lose that momentum and see gold potentially fall quite steeply. I think the other thing we have to think about, Manisha, what's happening in some of the physical markets as well, which have been so important in terms of really helping to provide a very solid floor to the gold price. And I'm thinking, obviously, India and China both are trading at a discount. Speaking to my colleagues today in both markets, India seems to be around the $20, $25 level. In China, we're around the $12 level discount. So that gives you a sense that these markets have backed off. And so I think we need to see, which point will they come back into the market. So I think that's something we are certainly looking out for. And so when you bring that all together, I think, yes, you are certainly at risk of a correction. But I think also it could be short-lived. We still have that positive momentum in the market. I think there are still those investors, and it's something we've spoken about on your show many times, those investors that perhaps have missed out on these levels that we're seeing. And so if gold was to, fall perhaps, towards, say, the $2,400 level, I think that would encourage a lot of investors to come back into the market. And so that would suggest that any correction would be, fairly short-lived, I would suggest.
Oh, absolutely. I'm sure a lot of people are waiting on the sidelines to, hop into those kind of corrections there. But Philip, also about silver, and this one also continues to surge higher. How are you looking at the current prices, the very, very strong fundamentals, and what would you say about silver, let's say, 2 years from now?
Well, it's a very good question there. So, as you pointed out, silver is doing pretty well, but the ratio against gold is still pretty elevated. It's come down to around 83, I believe, this morning or today. So it's still, I guess, underperforming gold. I think investors are looking at that. But I think a dynamic that we've seen play out over the past, few weeks and months is that, on occasion, when gold, reaches these levels and institutional investors think, well, perhaps, at least for the short term, the upside may be contained. Let's think about silver. And we see some of those investors switch their focus to silver, and then it can do fairly well from an investor standpoint. But you're absolutely right also that the fundamentals are very healthy. On the industrial side, the largest end use is the solar market, the photovoltaic market, as we call it. That's still going great guns, and we think will continue to provide that solidity in the market. Obviously, the price-sensitive areas are struggling. But, given those fundamentals are pretty healthy, well, I think silver could at least get into the mid 30s and potentially push on from there as well.
All right, so mid-30s for silver and gold. If I can push for a quick word on that, Philip, what's your sense on where the gold prices could be headed?
Oh, gosh, well, I think we're still playing to catch up with where gold is, really. I think overnight it got up to about 26.70, around that. So it does seem as though investors are pretty aggressive in pushing it higher. It seems as though, is 2,700 possible? I think that would still be quite a push, even though we're only $45 away as we talk today. I think there could be a wall of selling as we reach that level or approach that level.
Well, it's all about numbers right now, isn't it? And we will keep an eye on all of that. Philip, as always, thank you so much for joining us with your sense on gold and silver, both of those commodities which clearly are making the headlines for many days now. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.